The next Bitcoin mega pump is here, all thanks to the world's largest asset manager, BlackRock. They just made a move that could open the floodgates to institutional money piling into Bitcoin, likely making it a multi-trillion-dollar asset in the coming years. With 10 trillion in assets under management, yes, that's trillion with a T, BlackRock is one of the most powerful companies in the world. The crypto world was rocked by the recent news that BlackRock is applying to the US Securities and Exchange Commission for a Bitcoin Exchange Traded Fund, or ETF. The fund will be named the iShare Bitcoin Trust and aims to be listed on the NASDAQ.
Explain it!
Here's Spot Bitcoin ETF explained in under 45 seconds. An ETF is an investment vehicle that tracks the value of an underlying asset like gold, foreign currencies, or Bitcoin. Imagine you want to invest in gold, but you don't want to deal with the hassles of physically owning and storing the gold yourself. Instead, you decide to invest in a gold ETF. The ETF holds physical gold, and you can buy shares of the ETF, which represents your ownership of a portion of the gold held by the fund. When the price of gold goes up, the value of your shares in the ETF goes up as well, but of course, vice versa. A Spot Bitcoin ETF will work in a similar fashion. Instead of physically owning and storing Bitcoin, you can invest in a Bitcoin ETF. The ETF holds Bitcoin on your behalf, and you can buy shares of the ETF that represents your ownership of a portion of the Bitcoin held by the trust. In essence, a Spot Bitcoin ETF allows you to gain exposure to the price movements of Bitcoin without having to directly buy, store, or manage the Bitcoin yourself. But the reason why this is such a big deal is because a traditional investment vehicle like an ETF will provide a convenient and regulated way for a crazy amount of investors to participate in the Bitcoin market. Case in point, gold. Gold went on a massive rally after the launch of the first gold ETF in 2004, the SPDR Gold Trust ETF. At the time of the ETF's launch, gold had a market cap of 1 trillion. Today, gold is a $13 trillion market. The Bitcoin community is excited because Bitcoin is often dubbed digital gold, with many similar properties but viewed as the new and improved version. If a Spot Bitcoin ETF is approved, Bitcoin will likely enjoy a price trajectory similar to gold's. In the case that Bitcoin grows to a 13 trillion market cap, each BTC will be worth around $620,000. This is in line with Cathie Wood's prediction of each Bitcoin going to $1 million per coin by 2030, as more adoption by countries and institutions will help it flourish.
This is so exciting.
However, numerous investment firms have applied for a Bitcoin ETF since 2013, but the SEC has rejected every single one of them. One of those firms is Fidelity, which is a behemoth on Wall Street. The issue is so controversial that Grayscale sued the SEC after their request to convert their Grayscale Bitcoin Trust GBTC into an ETF was rejected. To date, not a single application has been approved by the SEC due to concerns about potential fraud or manipulation in the spot market. An SEC approval would allow for regulatory clarity, which would onboard more institutional players, bringing an inflow of fresh capital into the Bitcoin market. But why does BlackRock have the greatest chance of getting that approval? To start, they're the single largest provider of ETFs in the US, owning 33.6% of the market share. When they make moves, especially in the ETF sector, they're gonna make sure they don't miss.
This motherfucker don't miss.
More importantly, they're nearly undefeated when going up against the SEC. With a record of 575 to 1, the commission has approved all but one of its ETF applications, making them
the grand champion.
BlackRock is so influential that Bloomberg even called them the fourth branch of government. When COVID wrecked the global economy, the Federal Reserve asked BlackRock to help with this pandemic rescue mission. Going straight to BlackRock's co-founder, chairman, and CEO Larry Fink, since he is now one of the industry's most influential government whisperers. To give you context on just how insane it is for one company to manage 10 trillion, that's more than the GDP of every country in the world except for the US and China.
Say what?
They own 5% or more in most S&P 500 companies, giving them tremendous voting power and the ability to shape corporate landscapes. Case in point, ExxonMobil. Fink is an outspoken supporter of corporate ESG scoring. And BlackRock ended up using its 6.7% stake in the company to vote for changing members of its board of directors.
Corporate must have sent in a professional.
One reason why BlackRock became so wildly successful is because they own an AI software that controls the world. One that you've probably never heard of. Enter Aladdin, a portfolio and risk management software that oversees more than 21 trillion in assets used by over 200 of the world's largest institutions. And just last year, BlackRock let the crypto genie out of the bottle, giving Aladdin customers access to Bitcoin through their partnership with Coinbase.
Aladdin! Hello, Aladdin. Nice to have you on the show.
This is not the only sizable crypto business BlackRock operates. Last year, they launched the iShares ETF, its very first crypto-exposed ETF which tracks companies that are involved with blockchain technology, such as Coinbase. They are also the primary asset manager of USDC cash reserves, the fiat currency backing the Circle-issued USDC stablecoins. But BlackRock's Bitcoin ETF application to the SEC comes at a very interesting time. Just 1 week prior, the SEC decided to sue Coinbase for allegedly running an unregistered national securities exchange. It's a head-scratcher, because the SEC was the one who approved Coinbase's public listing back in 2021. What's particularly intriguing is that BlackRock intends to use Coinbase custody to control the funds in the Bitcoin ETF, despite the ongoing lawsuit from the SEC.
Look at me, sure. Look at me, sure. I'm the captain now.
It's a well-known fact that the SEC's chairman Gary Gensler has beef with crypto, and there's a lot of distaste on how he's approaching the digital asset sector, with some US lawmakers filing the SEC Stabilization Act to fire Gensler. Perhaps BlackRock is sending a message?
It's political, obviously.
The SEC's deadline to respond to BlackRock's application is around March 2024, a month before the Bitcoin halving. Analyst Crypto T tweeted, "You are watching Game 3 at work," adding that BlackRock understands that the halving is coming up and they need to capture Bitcoin's upside before their competitors do. The halving will see Bitcoin's supply get cut in half, while demand will likely continue to increase due to hyperinflation around the world. Just days after the BlackRock news, other financial giants are making moves in crypto. Fidelity, the world's third largest investment firm with 4.3 trillion asset under management, is rumored to be buying out Grayscale or filing a spot Bitcoin ETF application as well. A new crypto exchange called EDX Markets, which is backed by Fidelity, Citadel, and Charles Schwab, also just launched, further boosting confidence in the crypto market. Like it or not, institutional money looks to be piling into Bitcoin. Eric Balchunas, senior ETF analyst at Bloomberg Intelligence, said that the BlackRock filing changed everything. That ignited the race. The race is certainly on between Wall Street titans to see who will become the dominant crypto player. This is the ultimate signal that Bitcoin is becoming a legitimate asset and that the world is ready for it. You can buy Bitcoin on Big Is safely and securely, allowing you to front-run trillion-dollar companies.
Nice.
If you want to learn more on why the SEC is waging a war on crypto, you should check out this video here.